I think you've got to be somewhat concerned about the earnings miss. Mr. Flannery had an opportunity to sort of kitchen sink the fourth quarter, put a very conservative estimate out there only 6 weeks before the quarter ended, and he missed the number, which is almost inexcusable. And what it suggests is one of two things. It suggests that he himself is either overly confident or overly hopeful, which is the wrong person to be in charge of the company at this point, or that he's being fed information from the people below him who are either overly confident or don't understand their businesses, in which case he has more business problems than he expected. Neither of those are positive for the stock.
Okay, Scott, you're the bull. Must be pretty lonely right now.
It is.
But I guess you could argue that everything's down so much, you can only look higher here. But what?
It's a great American company, 50% on sale, right? I mean, the stock has been terrible. You've had every piece of bad news you could possibly imagine. Today's earnings miss was a small miss. I think that's relatively immaterial. And the SEC investigation comes out of nowhere. It just is one bad thing after another. But boy, at 16 times earnings, trough earnings with a lot of upside, and they can fix it. I don't see any better risk return out there pretty much anywhere.
Power down 88%.
Can it get worse? I mean,
we would have said the same thing last year at this time, right?
Well, look, if GDP is approaching 4%, I mean, utilities are going to be making power again. I mean, it's really that simple. I mean, GE is 30% of the installed base of all the power turbines in the world. It was a really tough summer. It was a tough fall for them, but I think that's bottoming out now. I don't think it's going to get materially worse.
Those energy prices have been on secular decline, though. I mean, that's why it's not just GE having problems in this business.
It's not just GE, but you had a lot of deferred maintenance. I mean, the Middle East and the U.S. are the two biggest markets for GE, and both markets deferred spending. And some of that has to do with Trump and the EPA, right? I mean, some of that is going to linger for the next year or so, but eventually you have to do work on these turbines. And not just, I mean, you have to turn them on and do regular maintenance, whether you're using them or not.
Graham, our David Faber has reported in the last couple of weeks here that there are sources at GE that they are seriously considering breaking up the company, and we could get word on that this spring. Good idea, bad idea?
I think it's inevitable after what we've heard today. It doesn't look like you can get your hands around this thing and manage it properly as one business. And so it really needs to be broken up into separate pieces. The hard question today is how do you do that? Because the easiest pieces to spin off are those that have the positive cash flow. But you need the positive cash flow in order to fix the businesses that aren't generating positive cash flow. And if you spun off something like healthcare or the aerospace business, the core company would probably be faced with yet another dividend cut. So it's not as straightforward as it sounds, but it's probably the right path.
Do you think it's the right path, Scott?
It's the right path. It's actually, I think, pretty straightforward, too. I mean, these are really good standalone businesses that would attract their own shareholder base. Very attractive assets. I think if each one of them were run to optimize cash and profits, you would see huge amounts of upside. And these are pushbacks we had on Tyco, gosh, so many spin-offs we've had, ITT, et cetera, where a lot of value is created over time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.